Welcome to the deep dive.
Great to be here.
Today we're jumping into something called BeeS, a set of investment tools in India. You shared some info, and, well, our mission is to quickly unpack them for you.
Yep, what they are, how they work, maybe why you'd be interested.
Exactly. We've got details on 10 different types, tracking indices, commodities, a whole range.
It's quite a list, from broad market stuff like the Nifty 50 to specific sectors, gold, silver, even Sharia-compliant options.
It's that range that's interesting. We'll look at how they offer diversification, maybe lower costs, and some, frankly, unique options.
Absolutely. So where should we start? The basics.
Yeah, let's do that. What exactly are B in simple terms?
Okay, so Bs are ETFs, exchange-traded funds.
Right.
Think of them like a basket of investments, maybe stocks or bonds or gold, but the whole basket trades like a single stock.
On the stock exchange, like during market hours.
Precisely. On the National Stock Exchange of India, the NSE, normal hours, 9:15 a.m. to 3:3 p.m. And each B tries to copy the performance of a specific benchmark, an index, or maybe an asset like gold. Prices move in real time.
Got it. So a convenient package deal. Let's talk Nifty Bees. Sounds fundamental.
It really is. Nifty BeeS, that was the very first ETF launched in India.
Ah, the pioneer.
Yeah. It tracks the Nifty Y50 index. That's, the top 50 or so large, actively traded companies on the NSE.
Big blue chips, basically, across different industries.
Exactly. About 13 sectors represented. And one unit of Nifty BeeS is designed to be roughly 1/100th of the Nifty V50 index value.
Makes it quite accessible then, price-wise.
Very. And the costs, the expense ratio, it's tiny. Around 0.05%.
Wow, that is low. So super cheap way to get broad market exposure.
That's the idea. Plus, because it tracks those huge companies, it's generally very easy to buy and sell. High liquidity.
Makes sense. Perfect for core portfolio building. What about junior Bees? Is that like the next level down?
You got it. Junior BeeS tracks the Nifty Next 50. So companies ranked 51 through 100 by size, just after the Nifty 50 giants.
Still big companies.
Yeah.
But maybe more growth focused.
Potentially, yeah. That's often the angle investors take. Exposure beyond the absolute largest, looking for that growth potential. The cost is still pretty low, maybe 0.2% to 0.25%.
Okay, so Nifty for the giants, junior for the next tier. What about getting specific? Bank Bees.
Right, Bank BeeS. This one narrows the focus right down to the Nifty Bank Index.
That's just banks.
Just the big liquid banking stocks.
Okay.
It's definitely a more concentrated bet on the financial sector.
Probably more volatile than the broad Nifty Bees then?
Generally, yes, sector bets usually are. But if you have a strong view on banking, it's a direct way to play it. Expense ratio around 0.19% or 0.20%.
Okay, let's switch to commodities. Gold Bees. Goldies. How's that work without needing a vault?
Ha, exactly. Goldie BeeS aims to track the domestic price of physical gold.
So the ETF holds the actual gold.
Essentially, yes. Or holds instruments very closely linked to it. Each unit you buy represents roughly the value of 1 gram of gold.
Convenient, but I saw the expense ratio is higher.
It is. Around 0.79% to 0.82%. That reflects the costs involved in, sourcing, storing, and insuring the physical gold.
Ah, the practicalities. Makes sense. People use it as a hedge.
Often, yes. Diversification, a potential safe haven asset.
Okay. Now, Liquid BS sounded completely different. Cash management.
Totally different beast. Liquid BeeS is, well, unique. It invests in super short-term stuff, overnight money market instruments.
Like lending money overnight between banks.
Kind of, yeah. The goal isn't really growth, it's safety and liquidity for cash you might need soon. A place to park cash short-term.
And the returns are like those overnight rates.
That's the aim. And here's a really neat thing. It typically pays out dividends daily.
Daily? Wow. Okay. That's unusual.
Very. Expense ratio is around 0.65%. It's more about capital preservation and liquidity than making big returns.
Got it. A high-tech savings account almost.
Yeah.
Then there was Sharia Bees.
Right, Sharia BeeS. This one tracks a custom index companies from the Nifty 50 that meet Sharia investment principles.
Meaning it excludes certain businesses.
Exactly. Things like alcohol, gambling, pork, conventional interest-based finance are screened out.
So for investors looking for ethical alignment based on Islamic principles.
Precisely. It's a specific niche. The expense ratio is around 0.50% to 0.60%.
Okay. And then there were a few other sector ones briefly. IT, auto?
Yeah, quickly. ITBEs tracks the Nifty IT index of major tech companies. AutoBees follows the Nifty Auto Index, car makers, parts suppliers, etc.
Tech and auto, got it.
And PSU BNKBs tracks the Nifty PSU Bank Index. That's the government-owned banks.
Right. Public sector undertaking banks, each
Right.
with its own
Okay.
sector dynamics.
Exactly. Different sensitivities, different potential drivers, expense ratios generally in the 0.20% to 0.50% range, depending on the specific one.
And lastly, silver bees. Newer kid on the block.
Relatively new, yes. Silverbees tracks domestic silver prices. Similar idea to Goldbees, but for silver.
Another precious metal option for diversification.
Yep. Silver has industrial uses too, so slightly different drivers than gold sometimes. Expense ratio about 0.50% to 0.60%.
So, looking across this whole family of bees, what are the common threads?
Well, generally, the big plus is lower costs compared to many traditional mutual funds, especially actively managed ones.
Transparency too, right?
Yeah.
You know what index it's tracking?
Definitely. You see the index, you basically know what's inside the ETF, and you trade them easily through a broker, but you do need a demat account.
That electronic account for holding shares.
That's the one. Of course, there are risks. Their price won't perfectly match the index that's tracking error.
A little bit of slippage.
Usually small, but it exists, and obviously they carry the market risk of whatever they're invested in. If the Nifty falls, Nifty Bees will fall too.
Naturally. So, wrapping up the core discussion, it's a pretty diverse toolkit.
It really is, from broad market index tracking, which is great for foundational investing, to these very specific sector plays, commodities, even that unique liquid BeeS for cash.
The lower cost structure and the ease of trading like a stock are definitely appealing aspects for you listening.
Absolutely. It gives you flexibility. You can use them to build a core portfolio or add satellite positions based on your views, potentially more cost effectively.
So, final thought then. We've seen this explosion, really, from the first Nifty BS to now having options for specific sectors, ethical screens, precious metals, even overnight rates.
Uh-huh.
What does this growing specialization tell us? What might it suggest about, the Indian investor today and what they're looking for in the market?
That's a great question to ponder. Maybe increased sophistication, a demand for more tailored tools, or perhaps just the market maturing to offer more granular ways to invest. Something to think about.